you may think I have Bitcoin, but I only have Bitcoin as much as I have time on this earth. And any possession, anything you have or own or have done, like, it really means you just have time.
Yeah.
So we're all investors, and time is more precious than Bitcoin. Finite. We don't know how much we have. There's not that much of it. So we have to use it wisely. And some people invest it incredibly wisely. They understand the game they're playing. And, you have folks like Elon Musk, Jeff Bezos. He doesn't have more time than me. He doesn't have more time than you. But, he's using it, and he's finding leverage, and he's getting this output. Yeah. And it doesn't always have to be like, successful company or whatever. You can create tremendous output with learning and growth and reading. Just got to build those leverages.
Today, we're talking with Tyler Winklevoss, co-founder and CEO at Gemini, principal and investor at Winklevoss Capital. He's an Olympic rower, and he is one of the early investors in Bitcoin. Today, we'll be talking about Bitcoin, where it started and where it's going, the growth of the Gemini cryptocurrency exchange, and the investment strategy and approach of Winklevoss Capital. And just before we get started, make sure to go ahead and hit that subscribe button so you get the latest episodes as soon as they're released. Now, let's get into it. Welcome, Tyler.
Well, thanks for having me, Alex.
Pleasure, mate. Pleasure. Let's get straight into it. First part is on the early days of Bitcoin. So I read that back in 2013, you and your brother owned 1% of all the Bitcoin in circulation. Is that true?
What you read, it might be true. Yeah.
Well, if that was true, that means that you bought them at under $10 a Bitcoin. And it's gone quite a lot higher since that time. I remember this is actually like in the early 2000s. It was like 70 cents. And I heard about it, and it had crashed and it had come back up again. But it started pretty early on. But so what did you see in Bitcoin that others had not until, just recently?
That is a great question. So what we saw, or what we learned when we saw it, when we started digging deeper, was that Bitcoin was the first money that was ever purpose-built for the internet. And so a lot of our money, like credit cards, ACH, even PayPal, has this illusion that your money's working on the internet, but really it's almost like, I'd call it internet-enabled banking. It's still running on the old banking rails that were set up and built by bankers in as far back as the 70s, before the internet even existed. So people have tried to cobble payments and money onto the internet through PayPal and other applications, but no one had really built a internet native money. And so that's what Bitcoin is ultimately. It's the world's first internet native money. It works like your email, and it has characteristics that are very similar to gold. So that's why we call it, internet gold or gold 2.0. So the idea of like this gold that's built for the internet, we thought was a pretty big idea.
So because there's a lot of conversations around cryptocurrency, especially like around the Bitcoin cryptocurrency. Is it a currency or is it a commodity?
That is a great question. And that is one of the questions. So in the United States, its legal designation is a commodity. So there was a CFTC enforcement order called the coin flip order in 2015 that designated it a commodity under the Commodity and Exchange Act. And I believe a district judge, a federal judge in New York, confirmed that ruling. So in the US, it's a commodity like gold or other commodity assets. But that doesn't mean it can't be used as a currency. Like gold was used as a currency. They're technically, I guess the term is commodity money, until the advent of fiat currency. So you can use these things as a currency, as a medium of exchange. There's generally three properties of money. There's medium of exchange, unit of count, store of value. And you don't have to function as all three of those to be money. Gold has historically functioned as all of those, but today it really sits in vaults. Much of it in vaults under the Thames River, and it plays the store of value role. And we see Bitcoin as an emergent store of value. It's gold 2.0, so it could disrupt gold. So it could appreciate a lot more from here. Bitcoin's market cap is somewhere in the 300 billions. Gold is 9 trillion. If Bitcoin disrupts gold, its market cap has to be worth 9 trillion. That puts a price of 500,000 of Bitcoin today. So even if Bitcoin only plays a store of value role for money, and does a better job than gold, it's still like a huge, it's a huge deal.
So I'm sure back in the day, and I don't know how long ago, when people first picked up a piece of stone and said, this is worth X amount of dollars, people thought it's just a rock, right? Mm-hmm. It feels like that's similar to Bitcoin. People don't understand how there can be value linked to this kind of internet money. Yeah. So how would you explain it to people that like, well, it's not gold, you know, like it doesn't have value, or it's not a diamond, or it's not cash, but even though that they are just ideas, how would you explain like why Bitcoin, I guess, like is such a good store of value?
Yeah, I'd probably throw the question back, right? I hope that's not a cop-out, but like,
not at all.
Everybody agrees that gold is valuable. I mean, it's in our movies, it's in Game of Thrones. I don't think you could talk to anyone on the street and they'd be like, I don't understand what's gold all about. Like, I wouldn't want gold. And so if we all agree on that, then the question is, why do we all agree on that? And you have to look at, so you go to the properties, and I had the same question too when I kind of came to Bitcoin and gold and trying to value Bitcoin. What are the properties that make gold gold? It's scarce. There's not a lot of it. It's somewhat portable. You can carry it around. It's somewhat divisible. You can smelt it. It's durable. It can sit on a shelf or in a vault forever. You know, it's not going to degrade like a vegetable. You can cut it. You know, you can divide it. So it makes good money, right? And so a good thought exercise is to put Bitcoin up against gold and each of those characteristics that we all think make gold gold. So in terms of its supply, Bitcoin's actually fixed. There will only be 21 million. The supply of gold is actually unknown. It's scarce, but it's increasing when people find more gold. And that can be technological breakthroughs. That can be an increased demand for gold. So gold is found in mind. And actually the above ground supply of gold has increased 60% since the 50s. There's still not a lot of it, but it's slowly getting bigger. Bitcoin's actually fixed. Gold bar is kind of portable, but at Bitcoin, you can send around like an email. You can carry a Bitcoin wallet in your head, in your pocket on a piece of paper through borders. So it's very, very easy to transport. You can divide a Bitcoin into 100 million pieces. This is a common misconception. People think, oh, well, Bitcoin's now at $18,000 a Bitcoin. I can't afford that. Well, you can come to the exchange we built called Gemini, and you can buy $10 a Bitcoin, $100, $500. You can buy a full Bitcoin. You can buy millions of dollars of Bitcoin. So like when you go down the line, Bitcoin either matches gold or it's superior. And so the reason gold has value is because we all think it does. It's supply and demand. And if people do that analysis on Bitcoin and realize that it's actually better at being gold than gold, people can buy into it, just like, people decided that Picasso was, a rare special thing, and there's no more going to be made, right? So it's kind of like art and gold. It's supply and demand, but it's all based on what we decide. And if people wake up tomorrow and say, you know what, I just don't think Bitcoin's, does it for me, then it, won't be worth anything. But if people wake up and say Bitcoin's better than gold, then there's a chance that it disrupts gold, and gold's really not that special.
Yeah, and I think for the majority of people, because they can go to the shop and they can purchase a gold like necklace or something like that, they can see that value. Whereas a Bitcoin is an idea, right?
Yeah.
But also I think like, yeah, the gold is an idea too, but it's just something which you can purchase at a shop and you can give as a present, and it's got this intrinsic value that is advertised and so on. Whereas a Bitcoin is just pure value. Right?
Yeah. I mean, so I don't know if you've read the book Sapiens, but it's a pretty popular book.
Yes.
It's a good, quick read. It does a great job of talking about like these fictions that man creates. And humans are we're effectively storytelling monkeys, and we're status seeking storytelling monkeys. But we can spin up these stories. We can spin up these fictions like a border, like crossing the Mexico-American border. No animal knows they're crossing that border. But as a human, you're like, oh, there's the border patrol, get your passport out. It's a big deal. We're like now in Mexico, we're now coming back in the US, or we're in a different state. We've all made this up. It's a collective hallucination. And money is one of these other great imagined fictions that man, woman, humans have created for commerce. So you're absolutely right that these are ideas. There's so much fiction in it, but like that's what makes us humans, and different than other animals, is that we can come together and coordinate around these ideas like patriotism, duty, and start wars over it, and crusades and religion. And it's like just an idea you can't point or touch. So I'm always fascinated with how like people are like, but it's not real, I can't touch it. Like most of the things in your life, including your dollars, you can't touch, and they're not that real. But
especially these days.
Yeah.
Especially these days where we can't have cash anymore because of COVID, right? And so now like it's all just like on the internet, like it's all just in the ether,
Yeah, and it's being printed so much. So that's been a huge driver for Bitcoin, because people are like, wait, there's got to be scarcity of money. And the money supply of dollars, it's a simple like, fifth. It's not even like, simple arithmetic, like third grade, fourth grade kind of stuff. Like the supply is getting bigger. My share of that supply is staying the same, but as a percentage overall, it's becoming much smaller. I've put my whole life into this system, and it's degrading. It's depreciating. So I'm going to put my blood, sweat, and tears over in a hard sound money like gold or Bitcoin, because it's just not getting debased, and there's no inflation over there. So 2020 has been the year of chaos, uncertainty, money printing, stimulus, helicopter money. This idea that literally governments are dropping money out of the sky. People are getting their checks. There's probably more of that on the way. And it's literally the Federal Reserve waves a magic wand and everybody gets money. And I think even people who haven't thought about this are like scratching their head a little bit and saying like, how does that work? Like, is this really real? And I think that's driven a lot of people into crypto. So,
and just quickly, so why is the Bitcoin limited at 21 million?
That is just what that's the rules of the game that was set up.
And the rules can't change?
They could, but you'd have to get more than half of the network to vote on it. And nobody's going to do that, because then they would be debasing themselves. So like me personally, I'm a hodler. I hold a lot of Bitcoin. Why would I want to own less of a percentage of the pie? And so there's very strong economic incentives I think incentives are like, I don't know who said this, was it Einstein or Buffett or someone, that they're like the eighth wonder of the world, right? And the incentives are aligned for people to play nice and play good, but also to keep it a fixed supply. Just like if you owned a Warhol, an Andy Warhol, painting or some sort of piece, you wouldn't want to like be able to agree with people to all of a sudden like bring them back from the dead, and that would be actually very cool. We'd all agree to that, but like you can't make any more art. So we can hang out with you, you can be here, but like, you can't make any more like, fuchsia mouse because I have one of however many, 10, and I don't want 100 because then, my investment goes, down the toilet.
And so this year has seen a pretty big appreciation for Bitcoin. And I think as at today, it's almost at 20,000 again, like around like 19 something, but there's less hype around it at the moment like, as it was back in 2017, 18. But why do you think it's having such a big run right now?
So I think the drivers are what I said before. I think it's all the money printing. I think it's the oncoming inflation. But the cast of characters who are really taking up large positions are very different. You have legendary investors. So Paul Tudor Jones is a legendary hedge fund investor of the last quarter century. You have Stan Druckenmiller. You have other hedge funders who are taking huge positions and coming out and talking about it. But on like, business channels, like they don't, it's not like super mainstream. And they believe in the gold 2.0 story. They're like, hey, Paul Tudor Jones said this, and he sent out a really cool investment newsletter, that in the 70s in the US, we had a lot of inflation. And one of his famous trades early on was gold. It would have been Bitcoin, but we hadn't invented Bitcoin. So today, he sees the same qualities in Bitcoin. So he's putting his wealth in Bitcoin. So there's a lot of legendary investors who you can't, maybe you can knock us like, hey, we're the Facebook guys from the movie. Like, what do they know? They have Bitcoin, but that's not convincing me. But when you start bringing in like Paul Tudor Jones, these investors who have made tremendous value for themselves and their investors, and this is what they do, and they're saying this is a good investment, that's a little harder to kind of like turn your nose at or deny. Secondly, and just to wrap that up quickly, is there are publicly traded companies like MicroStrategy. Michael Saylor is the CEO, founder of that company, and Square, Jack Dorsey's Square, who have put some of their cash on their balance sheet, some of their treasury money, into Bitcoin for the same reasons that these investors are, because they're worried that their cash is turning into trash. They want to save their value. So you've got institutional investors, you've got publicly traded companies starting to buy Bitcoin. And it's almost quietly because it's not a FOMO crowd. It's not like this remail. It's not like rappers and celebrities tweeting about it like 2017.
Yeah.
It's like the smartest people in the room who are kind of like discreet and quiet. And they're taking these bigger positions rather than the noisy people in the room with much smaller pockets.
So what does that do to Bitcoin when the institutional money comes into it? How does that change the characteristics of the trends, because it's been pretty volatile, like I would say, compared to lots of other commodities and currencies and so on, and like investments across the board. How does it change now with all this institutional money?
In short, the more people that buy into it, the more the market cap will increase, the value will increase. And the larger it gets, the less volatile it will get, but also the less upside and appreciation will be available to you. So people sort of complain about volatility. Yeah, like Amazon, when it was a small tech stock, like was really volatile, right? And it was kind of scary. But that was, if you got in early in 2000 versus 2005, 10, 15, I mean, your gains are just that much more. So there's no reward without risk, right? So high risk, high reward. And if you get in early, you are rewarded for that. And the more early you are, if people end up coming in and piling in behind you, you will ride that up. And so if Bitcoin's worth 9 trillion, it'll be kind of mature. The price will be steady, but it will not have what I have predicted is like a 25 to 30x from here. It just won't have that. So when I say Bitcoin is a store of value or playing that role, what I really mean is that today it's an emergent store of value. It's sort of growing into that. And that's where you get the asymmetric return. It's not just preserving your wealth, but you can actually 25 or 30x your wealth by my math. But over time, as more people come in, and when you're the last person to the party, you're just not going to have like the secrets out in the secret is out in the open, but like everybody started to build consensus around it. That opportunity just won't be there. So, but you have to have strong hands, be willing to weather storms and volatility. It's not an asset like you want to look at every day. Or it's money you want to kind of be able to put away for 5-10 years. And that's, going to be great. But if you wait till it's kind of like safe and boring, well, like that's like not settling the frontier, waiting for everyone to get to California and then being like, now I'm going to buy property. Well, it's going to be a lot more expensive than it was when you got there, before the sheriff was in town, before there was like infrastructure, before there was a saloon. It was fun. Now it's kind of boring, so I think there's, but everyone's got to make their own investment decisions, obviously.
So that's Bitcoin, but there's 1,000 other currencies, or there's 1,000 other coins, or whatever you want to call them. So aside from Bitcoin, is there anything else which you find exciting, like in terms of the other cryptos out there?
I'd say my number 2 favorite, and I also have a full disclosure material position in, would be Ether, which is the crypto of the Ethereum network. Ethereum, I don't think Bitcoin and Ethereum are competing for the same things. Bitcoin is your emergent store of value, gold 2.0. Ethereum is a decentralized virtual computer. Think of like Amazon cloud computing. That's what Ethereum is, decentralized, and Ether allows you to use that computer. So Ether is almost like a digital oil. Bitcoin is digital gold. These blockchains have the highest demand for people who want to invest, for people who want to, for engineers who want to build on them. And you can look at the demand for the space in each transaction block of the blockchain, and their transaction fees are high because space is scarce and people want to be in there. So there's metrics that show there's a ton of economic activity and demand happening for both of these cryptos. So I think like when people are saying, hey, how do I get into crypto? What do I do? My feeling is like, look, it always starts with Bitcoin, but I really think it starts these days. I think it's fair to say it starts with Bitcoin and Ether, and some combination of those two. You have a lot of your bases covered, because Ethereum is sort of like, if you think of Manhattan, it's the land, the substrate of what's going on. And there's all these projects being built on top of Ethereum because it's like an operating system. Bitcoin's it's simple. It's like moving, gold from A to B. Ethereum, you can create all of these applications. And there's this movement called decentralized finance, where you can borrow, you can lend, you can do all this stuff on Ethereum. But these are projects built on top of Ethereum. And if you own the substrate, like sort of the layer 1 of Ethereum, you have exposure to what's going on up there without having to pick which of the many, many projects is going to win. Some people, unless you do it for your full-time job, it's going to be a bit hard. So I sort of say, look, own a piece of the racetrack, and as long as the races are running, you don't have to pick the winning horse. You will do fine. When you get up the stack and you pick the horses, it can be higher returns, but also it can get pretty ugly because some things just won't work out. And most people, like all I do is eat, breathe, sleep crypto, and that's what I'll do for at least the next decade or two, or many more. But I appreciate that that's not what everyone does. So the cool thing is that you can own pieces of these network by owning the coins. You couldn't own a piece of the internet, really. You'd have to domain squat, like get a domain like Pepsi.com and then sell it to Pepsi or something. But you really couldn't buy a piece of the internet, and you'd have to sort of invest in these companies, and a lot of them blew up, right? But like now you can invest in the internet, the internet of money, by just buying these networks and just buying the underlying coin. So it's a different paradigm.
Yeah, sure. And what do you say to the challenge that there's too much demand for what Ethereum can actually handle?
Oh, I mean, I don't think anyone would deny if you're talking about like it's scaling and
It's scaling. Yeah.
Yeah. I mean, I think everyone admits that or like acknowledges that it's got to get better, right? Because there's just so much excitement and it could fall victim of its own success, right? The way of its own success is getting heavy for it. It just passed a really cool milestone last week where it's going to move into Ether 2.0, which is, I'm not super close to the details. I need to freshen up there, but like essentially it will move to a proof of stake and just upgrade in a way where it can scale more. There can be more transactions that can handle more applications because you're absolutely right. Like if Ethereum doesn't grow at that level, some other chain will. So I do think it's very much like Ether's to lose at this point. It's got so many network effects. Everybody, if you're going to build somewhere, you start there. But, we saw even with social networking, friends who had technical difficulties. It was kind of hard to log in. Then MySpace came. Then Facebook had its own breakthroughs. And then probably my guess is that like Facebook, you're not going to unseat Facebook the way it is if you try and do that. They just got enough things right. But interesting, there's sort of like new blockchains in social media, like you have TikTok now and stuff. But I sort of digress. Ether has a plan to improve. It needs to improve. I think all of these chains do because tech moves so quickly. Even Bitcoin has to keep getting better and more secure and everything. So as long as the community is like committed to that, I think I'm an optimist on it.
So it's Ethereum's to lose, which I've seen for the last few years anyway. Who would be, or which blockchain would be its biggest threat?
So I think a blockchain that usually there's this idea in tech that it has like a new product to unseat the incumbent has to be like 10x better. So one thing I've heard is that Solidity isn't like as user friendly to engineers who are like don't have like as high as skills maybe. So spinning stuff up in Solidity, which is the programming language of Ethereum right now, it's difficult, right? It's not like impossible or something. I don't think it's like C+ or C# or something. But it's maybe not as easy as like Java or HTML or something like that, right? And so if another blockchain comes on with the language that either uses an existing language that everybody knows, or creates something that's super easy, where like you and I can open up like a book or two, like not even a book, read like a chapter in a book and or not even just like go on the internet and build something, that's going to be huge, right? Because it's so easy now to spin up your startup on Amazon Cloud. It just took away this barriers to entry and that friction. And then there's a movement or like this idea of interoperability where you can kind of bounce between blockchains. And so a chain that's like super easy to build on that can kind of like interact with other blockchains where the switching costs, it's like sort of a economic term, like it's just not that hard to leave, Ethereum, and everything can kind of migrate. So I might be getting this wrong. I gotta brush up on but like there are efforts like Cosmos, Polkadot, Algorand. These are big names that have been around, and I believe all of them and many more are also trying to, solve the problems that Ether 2.0 will probably solve for ETH. But, competition's great and nobody wants to wait around. Everybody wants their shot at greatness. So.
Yeah, right. And so thanks for answering that question because that's something that I definitely want to know from someone that's been in the game for as long as you have been. Let's jump to Gemini. It's a cryptocurrency exchange, right? So you're fully into crypto. Like you've got investments you've actually created an exchange. But how did you get the idea for Gemini?
So yeah, we like to joke that we don't have our skin in the game. We have our whole bodies in the game. So the way we got the idea for Gemini is basically kind of how we've gotten any idea, which is we were dissatisfied with the state of play. Some of our earliest Bitcoin we bought on Mt. Gox. And whenever there was like a bit of a bull run back then, it could take a minute to get your order placed to buy or to sell. It was like unclear who was running the show. It was two Frenchmen in Tokyo with their cats. And it was like kind of a black box and super scary and not user friendly. Just to get over there, you had to apostille documents. It's something I learned, I guess, technically, instead of a notary, right, in the US, you go to like the State Department, and the federal government like says, authenticates your documents. You mail them over to Japan, then you wire your money over to Japan. And so you're in their legal system if anything happens. Well, I don't speak Japanese, although many Japanese lawyers speak impeccable English, even better than U.S. citizens. But it's just foreign, and you want to keep your dollars, they're not FDIC insured. And it was just sketchy. And so we, as investors, we looked at investing in other companies, other exchanges, but we really couldn't find anyone who we thought was doing it right. Everyone kind of was like, oh, I can build a better exchange and I'm going to do it offshore because I don't want to deal with regulation and all that stuff. And we just weren't quite satisfied with that sort of race to the bottom, race offshore. We're like, I think there should be a US exchange for cryptocurrency. We have the New York Stock Exchange. New York's been the home of finance for a long time. Why can't it also be a home, not the only home, but a home for this new revolution of finance, like Wall Street 2.0. And so we couldn't find someone to invest. And at some point we said, screw it, we'll just do this ourselves. We picked up the phone to the regulator in New York. Actually, we got subpoenaed by them. They were like, what is this Bitcoin thing? Like a lot of people, and it's a fair point, like, is this for criminals and for bad stuff? And we had already talked about this in the press, so they subpoenaed us and a lot of other people. They're like, tell us about this. Is this like some Ponzi scheme or whatever? It was a little bit antagonistic, to say the least, but we went in, we educated them. We're like, it's not a Ponzi scheme. There's a fixed amount. There's real merit here. I know you read about Silk Road, but it's about a lot more than this. And so to their credit, they completely turned around on that. They held a Bitcoin hearing in January of 2014. I think 150 countries, people from different countries, piped into this hearing, which is very, crazy for a New York state, regulator hearing. I think it was like 25, 30,000 people. And they got on board. They're like, shoot, there's merit here, to their credit. Let's usher this in. And if you want to be legitimate, like, come apply. And we basically did that hearing. And like the next day we called them up and we're like, how can we get licensed? We want to bring this to New York and build an exchange, do it the right way, with the right security, with the right compliance. We'll help you answer your questions. I think it's super important to engage with regulators because regulation is a spectrum. There's very thoughtful regulation that builds healthy markets and helps consumers, protects them. And there's one that are way too Wild West, like, Mt. Gox was just like, kind of too crazy. And there's one that are too, they sort of stamp out and they clamp regulation. And, you could make an argument that the US has been a little bit too far, it's been, it could be a little bit more into the thoughtful, sandboxy, let's run with this thing. But that's our story. We built this to solve our own problem, to help mainstream crypto and do it in a way that we thought was the right way, or a way that was important to build confidence and trust in the asset class and ultimately attract the big money that is starting to come in.
And how long did it take you from the 14th of, 2014, the day after the hearing in New York, to get the license? How long was that process?
That took, totally blanking, but I think it was like a year and a half.
Okay.
which was really, it was a significant amount of time, which at the time we were also building our technology, but there was a period of like, we were waiting. We were like, hey, we need to get out the door. But our ethos was, let's ask for permission, not forgiveness. And almost like by doing the right thing, they're like, oh, well, you can't really, do this until we're ready. And a lot of exchanges sort of went outside of New York and then came in later. And I don't know, in the long run, I think it's okay. I think people respect the fact that we did it that way. We didn't sort of end run New York, but it was a year and a half. And it's intense. I mean, I really respect the rigor they put us through. It was really important at the time because people were like, is Bitcoin illegal? How can we trust this? So having the New York Department of Financial Services on our side, Ben Losky is the guy, the superintendent at the time who pioneered this, having them, their sort of sign of approval was really helpful because it helped us build the trust, and then we could get a bank account with a bank. Now, if you start a company, that you can incorporate and open a bank account in the same afternoon. But if you say crypto or cannabis, like all of a sudden you now can only talk to 5 banks in the entire country that will take your call. And even that's like a big process. So when you have something like a New York Trust Company license, that is the type of license that Bank of New York started with, that Brown Brothers Harriman has, that State Street started with, that really makes the conversation a lot easier. It's still a difficult conversation, but it's because of what New York did, that New York State, that allowed us to actually start this adventure. So basically, if you get the regulation right, it really can. It allowed us to build a business. We now employ 330 people. Most of them are in New York, and I like to say they're not just jobs; they're careers. People come here and they go on to great things. A lot of people have been here from day one, but we're really changing. Like, this is an economic miracle story that is all a result of healthy, thoughtful regulation.
And you've gone down the hard path, which I always like to take. Like, it's to take the steps that other people are not prepared to take. Yeah. And so we're going through the regulators. You went through massive pain to come out the other side. And I'm assuming because you saw the long-term kind of, because of the long-term vision. Yeah. That like as soon as we start this thing, we don't want to be stopped by the regulators or be scapegoats in the media or all that type of stuff. And so you've taken the hard path with that. Well, it sounds like the very hard path. And so you're obviously very committed to this kind of industry. From that point of launching, like how did you get traction? Because now you've got the license, you started the business, and now it's a business. And now you have to grow the business. And so what were some of the things that you did like in the early days to get that traction?
Yeah. So one of our values is the long game. And it's super important because you're absolutely right. Like it's much more profitable right now in crypto to be short game. The biggest businesses right now are unregulated offshore. So there's times when it looks like, wow, like I wish we could be doing that a little bit more. But you have to have conviction because those kind of businesses are limited time only. I think you're already seeing some regulatory enforcement. So I didn't want to start on this adventure for only 5 years and, make as much money as we can, try to not get in trouble, and then ride off into the sunset. For better or worse, we were already public figures. So that might work for someone else who's anonymous, and then they quickly do their thing before regulators wake up, they're gone. That really wasn't a game we could play or we're willing to play. So we want to be in this for the long term. And I think our athletic background kind of taught us that in sport or anything, whether it's an instrument or trying to be excellent at anything, like changes take a long time. And, you improve over years. And you think about things in like Olympic cycles of the next 4 years, you get your chance again. So like it's very long-term thinking. It's day in, day out, grind. So there is no shortcuts in the sport of rowing and most sports. Anything that looks like an overnight success has really been like a decade probably in the making. Even Bitcoin, people are waking up. And my friend Max Raskin, he wrote an article about this, and he said, like, yeah, Bitcoin's overnight success, it's been a decade in the making. It's super fun right now, but like, I've been in this. It sounds like you're in crypto, right? Like, the winter's cold. It's harsh, right? The crypto winter, and we had to have the conviction and the fortitude to get through that. So that's just in our DNA. Myself and Cameron, we're very sort of committed to. We just believe that the real results take a long time. So how did we get people to join? Well, we blogged about it. We got some press and media. The cool thing about the crypto community, especially back then, it was like very loyal. People were very excited. It was a very underdog mentality. So it wasn't hard to get the industry and community's attention. And it's like I said, like, it's not like day one you open your doors and like, boom, there's a tidal wave, because people got to sign up, KYC, put in their documents, link their bank accounts. I mean, there were some blogs who like a day or two in kind of like was like knocked our volume. We're like, you can't even like sign. I mean, it's just hard to sign up that quickly and for people to start trade their algorithms up. Now you can sign up to Gemini in under 90 seconds. We have a mobile app, but back then on day one, you're talking about an MVP product and you're asking people to put like millions of dollars. I mean, you can't even like get millions of dollars in your E-Trade account like that, Yeah. So it takes time, but like all of a sudden you look back and you're like, look how far we've come. And you can say the same thing with the Bitcoin industry. The quality of entrepreneurs. Okay, my first Bitcoin investment was also Bitcoin, but also in a company called BitInstant. And the CEO and founder went to jail. He's Bitcoin's first felon. And that was one of the better companies in crypto. That, and you had Mt. Gox. So you can imagine kind of how, like, if I was horrified by that, and I was like in my early 30s and kind of a risk taker, still am. What do you think the institutional money thinks of that? Of course they're going to think this is a joke. They meet these people, they see people going to jail, they see Silk Road, they see that getting busted for jail. So we had to totally change that narrative, and I think Bitcoin has, but like, it's just time. There's no Hollywood fix. Even you see these like diet programs. It's like, we're going to lose weight so quick. Like, you got to change your lifestyle, your mentality. It comes quick, but it does take time. Like anything.
And so you launched in 2015, and then there was the massive run, and the whole world was on it. And then all of the social networks and search networks and everywhere they banned any talk of it, like any advertising of it, and so on. But how did you handle that massive growth between whatever it was, 2016, 17? Because the whole world came onto it, right?
It was pretty insane. We handled it as best we could. I think like many companies that were already operational, it was just like, keep your head above water, keep the lights on, try not to drown. There was days when you'd get like tens of thousands of new users, and things weren't as automated back then. So it was like humans going through licenses and KYCing people. That's why like crypto winter, when the price came down and things calmed down, we're like, wow, we get a breather. We can build now. And like, thank goodness. So you have to play your strengths to both sides. Like, I have a friend who went through the Navy SEALs, and they do all these exercises, right? In the water, in the sand. And he's like, when I was cold in the water, I was thinking about like how great it would be to run on the beach. And then when I was running on the beach with the boat on my head and putting the logs up, I was thinking how great the water would be. So you kind of have to like play them back and forth and just kind of like be grateful for what you are in, but take advantage. Like, there's no time to get better customers than the bull run. People should be coming in during the winter, but they always do the opposite. They see the price action and they come in. So it was hard. Like, it was just scaling and kind of keeping systems up versus kind of building new. So the crypto winter, like it sucks a bit because your revenue comes down, you're not making as much money, but you can build a lot of stuff. And there was a point in 2017 where we went from like 50 to 150 in like a month or two. We just threw on 100 people, and very high quality people. We did not lose that or compromise that, but all of a sudden, you know, we were myself and Cameron were leading a company of like 15 people, became 20, 25, wow, 30 is a lot. And then literally overnight, like 150. We tried to interview everyone till we couldn't. We were in Asia for 2 weeks promoting a product, and we were just blocked. It was going to block, you know, the hiring, pipeline. So we just, you know, delegated that. So we no longer were in every hiring, but we literally, everyone from the most junior to the most senior for the first 75, which is great because you sort of set the culture. But now I feel like the culture is so strong and everybody in it knows what it is. They're all stewards and custodians of it, that they understand it as well as I do. So it was growing pains. You know, it's like being a teenager. You like have this growth spurt and you're like super gawky and you like aren't coordinated. And so we started in a 5,000 square foot office, and then we opened up got some space in WeWork. And then the WeWork became 4 times bigger than the office like the headquarters. And in the meantime, we looked for a new office that's 50,000 square feet. And we've been in that for a couple of years now. And we have a smaller office in Portland, Oregon, about 30 people. We have an office in Chicago, an office in London, in Singapore, many places where you have to get licensed. They require you to have some boots on the ground and people like there, like a head of office in London, head of compliance there, in addition to, you know, the head of compliance in New York. So we built a global footprint. It's really cool. Like it's kind of, I mean, it's definitely intimidating to, you know, you start a company, right? Leading people, like these people really want to follow me. And you kind of get over that, like, I don't know, quickly, hopefully. And then all of a sudden 20, you know, 30 is the same as 20 and 100 is the same as, like, if the company becomes 1,000, it won't feel different to me at this point. It was really kind of like the first 15 people. It was kind of like the founding team. Yeah. That was new, but at some point it's kind of like, I don't know if you've done public speaking or something. When you're in a stage that's so big, it's like a spacewalk. You can't even see people. It's almost like you're talking to yourself versus like giving a talk in a coffee shop is like really intimate. You can see everyone's eyes and everyone's face. So, you know, the company changes, but it's been wild, but I mean, it's a dream come true. I think that when we got in this journey in 2012, I said I was going to be sitting here talking to you in 2020, and this was going to be the facts, and this is where Gemini is and whatever. I'd be tickled pink. So, you know, very grateful.
Yeah, great. And so you're an investor, like in crypto itself. You've created the platform where people can purchase and exchange and trade and all that type of stuff. And so that you also got that part of it. But then you also have an investment company called Winklevoss Capital. Is that right?
That's right.
And what kind of companies are you investing in?
So Winklevoss Capital predates crypto. And basically we are most excited with the earliest stage companies, like the entrepreneurs that are just starting out. That's super exciting. Find bright people, hear their ideas, and try and be the first money in. Most of them, like with a technology focus, doesn't have to be. We've actually put some money into consumer packaged good companies, and but like, you know, pure tech plays, pure software plays, and it's sort of like anything that is solving a problem for someone else. And I know that sounds vague, but like we started building Gemini because we wanted to solve our problem, you know, a local problem. We started rowing in high school, but there was actually no team. My next door neighbor was a rower. He went to boarding school. I wanted to try the sport. There was no team, but there was water. So we started it. So that was like our first startup. We said, okay, I'm not going to accept this answer. I'm frustrated by that. I'm going to do something about it. So that's how we got into rowing. We started the team, then became Olympians. That was kind of how we started with social networking. We wanted a better way to connect with students. So we started a social network. And with Gemini, so I think when I see that in other entrepreneurs, they've been living with the problem, they're frustrated, they have a good way to build it. You could say it's about reducing friction, it's building a better world. It's all the same thing. It's sort of like, people who have the courage to not accept the world they've inherited and realize that like, hey, I can actually shape this, change this and the way I want. So that's kind of like the ethos. We've invested a lot of those companies. So Winklevoss Capital started in 2012. We incorporated in early 2012. We went on vacation to Ibiza. We found Bitcoin. And so we started investing Bitcoin. But many of the companies, it was only Bitcoin. There was no crypto, there was no Ethereum, no Ether. And so a lot of Winklevoss Capital investments were into startups, so we're non-crypto. And over time, we've invested in a lot of startups that are crypto. Like it's sort of like crypto is becoming like it all. It's kind of coming together. Whereas like venture capital really wasn't necessarily internet companies. And at some point, it became that. But before that, it was like semiconductors, was personal computing, a lot of hardware sort of technology stuff. And there was no funds dedicated to big tech companies. That was a novel, exotic idea for a fund to focus on that in the 90s. And similar to crypto, there just wasn't that many great entrepreneurs or great stuff being built. So now I would say Winklevoss Capital it was like doing non-crypto stuff. We'd own Bitcoin and we were doing other stuff. And now it has a huge focus on crypto companies as well. So like Protocol Labs, we're first money in Protocol Labs, which created Filecoin, which is similar to Ethereum, but it's decentralized storage. So if Ethereum is decentralized computing, think of like Amazon Elastic Computing. Filecoin's like Amazon S3 buckets where you just store data. So that is a Winklevoss Capital company. Another company called Flexport, which is helping freight forwarding, basically making it electronifying the idea of moving freight from, let's say, China to the US. There's like fax machines, it's opaque. There's like manuals of like different code. It's like dark ages, right? And so they're making it transparent, tech enabled, and they've been doing great. We were the first money in there. They now are well over $1 billion valuation type company. I think they recently took a round from SoftBank. And then Founders Fund before that. So it's really fun to follow that transgression or the progression of those companies. But the interesting thing is like crypto is so liquid. You don't have to wait 10 years for the company to IPO. You can buy the token and it's liquid today. You can trade in and out of it on Gemini. So the model of like how a startup raises money, does it raise from a venture capitalist? Does it do a token sale? It's going to be interesting to see how that plays out.
Yeah, right. So outside of blockchain, what are some of the biggest trends that you're seeing for the future, which you're excited about and which you're like investing in or just looking to invest in?
That is a great question.
Because I know the whole conversation's been around blockchain so far, but I know you're doing other stuff too, for sure.
Yeah, I mean, we are. And this is always when you like sort of blank in the interview, but like, there's a lot of interesting infrastructure companies that are now servicing blockchain. So we use a company called Plaid to help people link their bank accounts, which is I wouldn't consider it a crypto company. It's not an investment of ours, but like it's infrastructure that we use. I imagine that many other exchanges use as well. There's a company called TaxBit that we invested in that's helping make crypto taxes easier. So Gemini is going to use them, right, at some point. We're already integrating with them. Companies like Coinbase, like all the other exchanges, are going to need to provide this service for their customers. And it's probably a service that they themselves just don't want to they're not in the business of that. So there's amazing like plumbing startups that maybe don't touch crypto, but allow the crypto industry to grow. And at this point, like the industry is getting so big, and my feeling is that it will be so big that we may do most of our investings in it. So in terms of trends, I gotta say that like, I really have been thinking only crypto trends.
Yeah, I got that from your answer.
Yeah,
it's like, well, if it's not blockchain, it's the infrastructure supporting blockchain. That's not technically blockchain.
Can you tell I'm kind of hooked on this?
I can tell.
So, okay, VR is obviously something that's going to be the future, right? The hard thing to know, though, is like, how do you get on that train? What do I invest in? And is that the kind of game that's going to be won by like the big tech companies like Apple, Facebook? Is there an opportunity? AI is a huge trend. There's nothing new there. I'm not spilling any beans. Again, how do you get into that? And
cannabis you mentioned too before. I mean, like, is that something which you are looking into?
Yeah, okay, I'm glad you brought that up. We invested in Ease, which is kind of like an Uber for cannabis, right? So you, as an app, comes to your house, super easy.
Awesome.
You kind of know what you're buying. And so Ease is cannabis, but like everybody has a cannabis idea, right? So you can find your way into cannabis, but what's the quality? Is it dispensary? Is it the tech-enabled, platform like Ease? We went for the software because that's what we know. But there's, everybody has a cannabis idea. Obviously, cannabis is here to stay. Huge trend. I think psychedelics, right? Psilocybin was a big win in the ballots in 2020. So I think you're going to see the same cannabis trends happening with psychedelics. I think it's a sort of a new frontier in a good way. So that's going to be cool to see. But like, to be frank, most of our energy has really been going into building in the last couple of years, especially with Gemini. We recently acquired this platform called Nifty Gateway that allows people to trade, buy, sell, and store digital art and collectibles. So you can program art that's scarce on the blockchain now. And so niftygateway.com, we've gotten a lot of artists to create art for it. And we have users, we have a great audience that buys this stuff. And we do drops similar to how sneaker culture does a collaboration with an artist, like a Nike sneaker or something, an Air Jordan with some artists. They do a drop, people buy them, they wait hours in line to get the special edition shoes. They might wear them, they might put them on their shelf, show their friends. They might just flip it and sell it. So we've brought some of that culture to the blockchain. So between building Gemini and Nifty Gateway and all this stuff, we've definitely been putting our mind there. But investing is really cool because, we meet young people and see new ideas. So, and that's kind of how we got into Bitcoin. So we kind of always want to keep that muscle going a little bit.
So a couple more questions and we're done.
Yeah.
What would you do differently if you started over back in 2012? So what were some of the lessons, or what would you change, or what would you do differently?
I would say the most obvious thing is probably get a mobile app out earlier. One thing I didn't quite appreciate is that a lot of Gen Zers or young folks, like that is their laptop. They don't even have a computer. That is their computer in their hand. So with our experience with Gox, we message that like institutional exchange is very important to be the institutional guys. But crypto has really been a retail phenomenon for forever. And so we have definitely moved into, we have a retail story now. We've had an app for a couple of years. It's great. But having that a couple of years earlier might have caught the market where it was as opposed to where it was going. So I'd say like this, we almost built a little bit too much to where the puck was headed, like the Wayne Gretzky, quote where he says like, I don't skate to where the puck is, I skate to where it's going. But you want to make sure to, kind of grab the puck too and bring it with you. So I think that we might have just started like pure retail, more retail first, which doesn't mean you have to get rid of the institutional grade technology. It's just you have to make it, user friendly for them. So we have an incredible retail story today, but I would have front loaded that a little bit more.
Yeah, sure. Okay, good. A couple of quick fire questions, and then we'll wrap up with basically how people can get involved in the Gemini exchange. So there's 5 quick fire questions. Number 1, what book has had the biggest impact on your success?
That is tough because I think of books that each book sort of trains your mental model, and it's hard to know which one had the biggest effect. But one that I did love that I think is it resonated with me a lot is 0 to 1 by Peter Thiel. If you really want to understand the art of startups and how and why they work, and a lot of it's really counterintuitive. Like I'd be the person who would be like, oh, you want to launch like a perfect product, wait till it gets all right. That's exactly what you don't want to do. You want to launch a product that's almost embarrassing. Or at least you look back on it and it's embarrassing, and you want to get out there quick and iterate and find the traction. Yeah. So this book is like a Bible for anyone who wants to understand how startups work. And Peter Thiel, of course, is legendary, PayPal founder, legendary investor, a polymath, one of the greatest, deepest thinkers from Silicon Valley. So that's a great starting point. And I would say, I would start with that for sure.
Cool. Number 2, what's your number 1 piece of advice for hiring awesome people, which you've obviously had to do with Gemini, a lot of them?
Yeah. My dad always said like he tries to hire people that are smarter than him, and I've tried to follow that. So always hire people smarter than you that are just brilliant and incredible. I recently read the Netflix book by Reed Hastings and I think Erica Meyer, No Rules Rules. They have this concept of every employee should be a stunning colleague. Only hire people that are absolutely stunning. I think that never compromise that. I'd also say that hire in terms of 3 things. I would hire, values are the most important part, like integrity, character, right? Those are things that are really baked in and hard to change. And then abilities, which are sort of raw horsepower, which are also hard to change. And then you have skills. So when you're assessing someone, you have to get the values right. Like, are they high integrity, high character, trustworthy people, right? That's the most important thing. The second is the abilities, like the raw horsepower. The skills is the least important, the easiest to change. If I get someone with great values, high abilities, I can teach them skills. Gemini will teach them skills. And like experience is like kind of not that helpful or important in crypto because everything's so new. And a lot of times experience is another word of saying like bad habits or bad assumptions. And you're bringing all this baggage and bullshit to Gemini. Like I prefer a clean slate. Give me a person who the clean slate, high integrity, incredible values, and incredible abilities. We'll take care of the rest. So those 2 mental frameworks, a stunning bar and sort of like values, abilities, skills I think are really a good way to think about hiring. And then also, you're going to be like spending more time with these people than, your significant others. So you better like them,
Yeah, I hear you on that one. Number 3, what's your best time management or productivity tip?
That's good. I've been thinking about this recently. I think people make a mistake of not chunking things enough. So I recently read this blog that said if you read 30 minutes a day, even if you're a slow reader, they did the math, you will read 50 books a year. Now, that's a lot of books. And if you're a fast reader, you read an hour, I guess that means you read 100 books a year. 10 years, it's 1,000 books. You'd be one of the most well-read people and maybe in the world, right? And books are like the ultimate skill because you can learn anything. You can learn how to program, learn how to entrepreneurship, crypto, whatever. So I think people make the mistake of thinking, well, I need an hour of free time to read. And you have a minute, 5 minutes here, 10 minutes here, you take the subway, you take the cab, you're sitting in the doctor's office waiting for your appointment. If you have a Kindle, like you can find 30 minutes a day and all of a sudden you're reading 50 books a year. And most people sort of say, oh, I got to wait till I'm on vacation. Then I'll read these books I've been meaning to get to, and they procrastinate because they take it too big. And then work calls you when you're on the beach and there's an emergency and then you don't read it. So I think chunking things in really small bits, like you could literally learn a language, learn a new instrument. You could read 50 or 100 books in a year if you thought in like 5 or 10 minute chunks and just found those moments each day, which we all know we have a ton of them, as opposed to waiting for like, oh, I've got this big an hour. Now I'm going to learn piano in an hour, or now I'm going to learn French or Spanish. And just 10 minutes a day or chunks of 10 minutes a day, you get super efficient. Yeah. So I think that's a really important time management thing that I'm trying to work on, like, not waiting for too much space and being too perfect, but really diving in and constantly, like, it's startups, like constantly iterating and learning.
Yeah, so on that book side of things, I think I read some similar article where it said, instead of opening up your social apps, just get the Kindle app on your phone and hide your social apps and have that be the first thing that you open. And I tried that, and in a month I read 3 books. And it's hard to maintain it, so like I have to go back to it. But that's that exact point. And I was like, oh, just open that app, not the other one.
Yeah, and 3 times 12, right? 36 books. That's like we all would grow a lot from that. Yeah. And of course, pick like pick books that you really like, right? So I think there's a choice. Like the only thing we have is time. I love this idea. Like you may think I have Bitcoin, but I only have Bitcoin as much as I have time on this earth. And any possession, anything you have or own or have done, like, it really means you just have time.
Yeah.
So we're all investors, and time is more precious than Bitcoin. Finite. We don't know how much we have. There's not that much of it. So we have to use it wisely. And some people invest it incredibly wisely. They understand the game they're playing. And, you have folks like Elon Musk, Jeff Bezos. He doesn't have more time than me. He doesn't have more time than you. But, he's using it, and he's finding leverage, and he's getting this output. Yeah. And it doesn't always have to be like, successful company or whatever. You can create tremendous output with learning and growth and reading. Just got to build those leverages. Yeah.
Yeah. Cool. Number 4, what's the best piece of business advice that you've ever received?
I feel like there's so much. I think, I don't know if I received it or just kind of learned it. Only do business with people that you enjoy, kind of thing. Like, the same thing with picking a co-founder. It's like a marriage. You're going to be wedded to this person for at least a decade. So if there's any question, or you're making excuses like this person's really brilliant, but they're kind of shady, or they're kind of a jerk, don't even come close to it. or if it's a partner, you're trying to work with someone or a customer or client, and they don't share your values, or they're just too difficult. It's just not worth it. You can find the people who understand your value, that you guys see eye to eye, that there's, that you're in sync on. So if it's too difficult, I find, like, even in the hiring process, when you find yourself like hustling too much to pitch the company and the person doesn't get it, like, it just wasn't meant to be. And you'll find like incredible people who you don't have to hustle, and you do your pitch, they pitch you, and it's a beautiful thing. It's like a great relationship. Both people are engaged. No one's chasing. They're both chasing each other. Head over heels. Like I think like forcing it, if you want it bad, you get it bad, kind of thing. Like, so I've sort of learned to think. You try and hire someone, you don't get them, and early on, you're kind of disappointed. Maybe you're like, damn, like, could I have sold it better? But like, it had nothing to do with you or like Gemini or something else. It was just person's, they just weren't that into crypto, or their wife didn't let them, or husband didn't let them join, or, they had to pay a certain bill and take a job at a hedge fund. So just kind of like being okay with all, like letting it go and realizing that, like, good, like, I'm happy for them, happy for me. They're like, it just wasn't the right fit, I don't know. I'm blabbing a little bit, but I think
it's good. Look, I think the point around you want to like the people that you do business with. I hear you. I couldn't agree more. And have people around you that are good, and just let things go. Like, don't hold on to them too much. If things don't happen, they don't happen. Doesn't mean to not stop taking action, but don't be too stuck on it. Like, it will happen if you put some good stuff out there and you keep.
Yeah, I mean, like,
forward.
And you're not going to click with everyone. You know, it's okay. It's okay. But when it just fits right, and it's like the person is like. And sometimes it's a person they are like superstar, and the sell's so easy. And some person who's much less of a superstar, more junior, and they reject the offer. And you're like, how does that make sense? The person who's like the real rock star, like, was so easy to talk to, and they came, and the person who's like super junior was asking all these questions and like difficult, and they didn't take the offer. So kind of like you learn these things when you do a startup. It's one of the hardest things you'll ever do, but it teaches you so much respect for your time, and it's so much about people. So those are my little tidbits.
Number 5 is the last question. How do you relax after a crazy day in the office or home office, wherever is the office these days?
Yeah, the office is everywhere, right?
So how do you relax after a crazy day?
So 2 things, like working out is great. It's a great mood alterer for me. You get the endorphins flowing. So either run, get a good sweat on, lift some weights. Anything active is great. I love reading. I love films. I play the piano. I grew up playing piano, and I restarted playing at like 35 again. I'm 39. So about 4 years ago, I just was like, I need something else in my life.
Same, by the way. When I was 32, I was like, I got to do this again. I got to do something that's not just about achievement. I got to do something just because,
Yes, I know. It's a sickness. We're all like indoctrinated. It's like achieve, go, 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 go. At some point you can't just do that. And then meditation. I've been on and off a meditator for maybe 7 years. I learned from this guy, Tom Knowles, a guru. He's based in Arizona, but he travels the world. He's got a website. He's great. It's a mantra-based meditation, but I've been in and out of practice. But like, if you're feeling stressed, you've got a headache, your mind's spinning, and you've got to go to bed, and you've had the longest day, and you've got a long day coming up. 20 minutes of meditation is quite a good way to just flush your brain, your mind, and wipe it. which is also very good at night because sometimes if you work out too late, right, it keeps you up. It feels so good, but sometimes you want to work out in the morning, it sets your day up, but you don't want to do that kind of activity. So an instrument or a movie or meditation are incredible ways to wind down. I've always found, like I always say, my temple is like a movie theater. Not anymore, I guess, because of COVID and the lockdowns, but like in Mad Men, Don Draper would go, he'd work all day, have these ideas, and then he'd go to the movies, right? And the eureka idea would come. Because neurologically, you're just using a different part of your brain. You're creating that space. I find if I go to a great movie and just watch it, it feels like meditative for me. And so, you can do that in your house and stuff. So I think these things that use different parts of your brain, not just work, business, crypto. The thing I love about crypto is it's so intellectually stimulating and it does touch so many different things that I don't feel like I'm in one track, right? You've got economic theory, computer science, so many different disciplines that you have to think about and learn that it's like an intellectual feast, but still it's like the context of like Gemini and work and crypto. And it's great to just throw on like a classic movie or read a book and totally switch off. I think that's so important. And it makes you better at business too. Like you get your ideas over there and you come back and forth. And it reduces stress, and stress is, we're all like dying of chronic stress, right? So
yeah, right. And now for people who want to get into crypto or that are into crypto already and they want like a better way to trade, to buy, how does Gemini work?
So it's pretty simple. You can come to Gemini.com or you can go find our app in the App Store on Apple or Android. You download, you open an account. Then you connect your bank or your debit card, and you can place an order to buy crypto like Bitcoin. So it's similar if anyone's ever traded stocks, they've opened up an E-Trade account or a Schwab account. Or an online bank account. It's basically like opening up an online banking account. We ask you to verify who you are. It's pretty quick. We can do it in 90 seconds automatically. You add your credit card or your debit card, link your bank account, and click buy for however much you want. So we've got 26 cryptos, Bitcoin, Ether, as we mentioned, Zcash, a bunch of others. We'll be adding more. And right now you can buy, sell, or store your crypto, but we're going to be getting the things like earning, spending, more sort of money verbs is what I like to say. So we're trying to just be this like one-stop shop for you to come and get into crypto.
And is that across the world? Are there specific countries?
Yeah, so we're open in every 50 state. We're in the UK, Europe, Canada, Singapore, Hong Kong, Australia, some parts in South America. We actually have areas of availability on the website, but we have like pretty big coverage, like over 100 countries. So chances are we're open where you live.
Yeah, great. And I mean, you hear how excited Tyler is about the crypto space. He's been in it since 2013. He's still in it. I tried to ask him about things outside of crypto, and it was all about crypto. But thank you so much for sharing your thoughts, your beliefs, and just your passion and excitement around the whole industry. There's not too many people that can speak about it at the level which you speak about it, and just more at the institutional level as well, and less the fly-by-night people like which everyone kind of hears about, And so look, I really appreciate the time on the podcast today. And if you're listening and you're into crypto, sign up at Gemini.com. Is that right? Is it?
Yeah, it's spelled as the astrological sign. So GEMINI.com.
Fantastic. Tyler, thank you so much for your time today. Enjoy the piano, the movie, and the meditation.
Yeah, thank you so much for having me. This was a really fun conversation. I appreciate it, and thanks for the kind words.
Fantastic, Tyler. I'll speak to you soon, man.
All right.
Bye. Thanks for listening to the Growth Manifesto podcast. If you enjoyed the episode, please give us a 5-star rating on iTunes. For more episodes, please visit growthmanifesto.com/podcast. And if you need help driving growth for your company, please get in touch with us at webprofits.io.